So in our previous segment, we established what a trend was. We had an uptrend, which is higher swing highs and higher swing lows, where the mountain peaks are getting higher and the valleys are getting higher. And then we had lower swing highs and lower swing lows, where the valleys were getting lower and the mountain peaks were getting lower. And then, of course, the sideways trend. So the chart's reality, and we can't choose which way this trend goes, but we can choose whether we're bullish, whether we're bearish in our strategies, or whether we use time decay in a stagnant market. And we'll learn about those bullish, bearish, and time decay strategies in the next pillar of cash flow. But that's what gives us back our power, is our ability to choose the strategy. Let me reiterate that. We cannot choose where this chart goes. It's going to go where it wants to go, and that's the reality no matter what your fundamentals say. But we do get to choose our positioning, and that's where the power of the third pillar of cash flow and the fourth pillar of risk management hop in. So George Soros says, look, we don't know how long these trends will last, but he says here, we're going to try and catch new trends early and see how long they go. And when there's a reversal, let's catch it and see how long it goes. You really don't know how long a trend is going to last. Some last a long time. If you were bullish over the last 10 years in the stock market from, not the last 10 years, maybe 2010 to 2018-ish, that in 09 to 18, that 8-9 years, probably did pretty well. So the question is, does George Soros use fundamentals or technicals? Well, he uses both. Certainly his play on Japan was brilliant, $1 billion worth of brilliance by seeing the monetary policy. Certainly that had a lot to do with it, but he also uses technical analysis. So let's look at changes in trend. My mother, when she would say no, I'd say, yeah, I'd just ask again and, see what she'd say the second time and get an uptrend out of it. So you can see that, I asked her once, I says, hey, can I go with my friends? She said no. So I come here again, I ask the same question. Can I go with my friends? She changes her mind. And that's what an uptrend is. It's just when people are changing their mind, when there was water some of you guys won't remember this because you're not old enough, but I used to play basketball, and when you were thirsty, you'd go out in the hall of the rec center or a church or wherever you were, and you would go to the drinking fountain. And that's pretty much a science project in those days. I'll tell you what, stuff that was growing in there we don't want to think about. But when you went to the 7-Eleven and you saw them selling bottled water, you thought it was crazy. Now, my sons grew up with bottled water, so they didn't think it was crazy. But those of us that didn't grow up with bottled water, it's like you got water out of a hose. You mowed your lawn, you sprayed the glass clippings off, and then you took a swig out of the hose. And that changed. So when I first saw bottled water, I said no. And then later on in my life, I said, well, yeah, it's not a bad idea. It's clean. It's got a container. It's cold. Sure, it's worth $1. And so water trended up. That's the way it was with my mom. Can I go with my friends? No. Please? Yes. Dad was different. Dad was different. When he said no, man, he was absolute in everything. It was black and white, good and bad, good and evil, no middle ground. Yes was yes, no was no. Done. And so those are different stories, aren't there? And all this is gathering intel and telling a story. So once they dig in here, now the question is what's going to happen right here? Are they going to say yes again and dig in, or is it going to change? And this is how we see an opinion change is, oh my gosh, this is called a double top. And now the question is if it hits here, can they change again? And this position is called a kiss goodbye. And there is a mentor club that we do with our students that we don't talk about support, resistance, things like double tops and kiss goodbyes. And the reason we call this a kiss goodbye is this quite possibly could be goodbye to the uptrend. If it continues, then we won't. The only thing we need to call this a downtrend now is, okay, here's a valley and here's a valley. So we have the lower low. And if this goes down, now we have the lower high, and we can officially call this a downtrend. A downtrend is a lower low and a lower high. So this is called a kiss goodbye, and we're wondering right here, there's a question mark. Is this going to fight through and be a yes again? We like this price, or is it going to go down? And the only way to know is to wait and see. But it does put us on alert. And so now that it goes down, you can see very clearly we've established now a downtrend. And we would tend to trade the stock that way under most circumstances, depending on the broad market trends and so forth. Now, I know I've pounded on this a lot, so I'll ask your patience with it. I won't ask your forgiveness because I'm not apologizing. I'm just saying, hey, understand why I relay this information the way I do. Is I was taught technical analysis as if it was a crystal ball, and that was an incorrect teaching. So while I'm grateful for my teachers and mentors who got me started, they were teaching things like MACDs and stochastics and double tops and dojis and bullish engulfing candles and all the stuff we're going to get into as if this was a way to know what the stock was going to do before it did it. And the holy grail of technical analysis is a crystal ball. That really was what everyone wants, and because that's what they want, that's what they try to make it into. I like the Benjamin Graham idea of being intelligent and saying, let's gather intel and what's the story of this stock? So the question is, can technical analysis and stock charts and patterns and candles predict the future? My opinion is no, they cannot. I like the word likelihood, saying, well, I don't know if this is a change in trend. I don't know that for sure, and I certainly wouldn't bet my life on it, and I'm not sure that I even bet my money on it at this point. But I would say this, the chances of it turning are greater with a double top, perhaps, than with one no, right? And so we might not think of these as a crystal ball. We might think of these as just something to pay attention to. An alert, perhaps. Oh, look, double top. Let's pay attention. There might be a fire here. There might not be a fire here. Alerts don't mean fire. Now, smoke means fire, but alerts do not mean fire. So when you look at this particular chart here, you know, at this point, the stock could do several things. It could go higher. It could come back and hit here. It can go back. This is a kiss goodbye, right? And these chart patterns are what we see. And our ability to recognize these is what a change in trend look like. We can flip these upside down and see the end of a bearish trend into a bullish trend just as easily with a double bottom. Some people remember this by saying M stands for murder and W would stand for winner. But in the real world, you can see these happen. And they don't hit perfectly. You know, these are not exactly like plates of glass. They're more areas. You know, when Warren Buffett, or more correctly, Benjamin Graham would say, you know, here's the fair value of a stock, and this is where it should go. It was a range. It wasn't a target. It was a range. And so, you know, we might draw it like that and say, yeah, that's an M, basically, right? That's an M. And that would be a double top. Okay, we'd find our support line in there, which becomes our resistance line. There's our kiss goodbye. So I draw these, you know, right here like this, very, very straight. And you begin to see them in the candles, you know, as you kind of squint and look at it. And the question is this kiss goodbye? So when we get into trading, maybe I put an order right here that's a contingency order to go short. And it's a contingency order, meaning that if the price comes back down and hits that, it'll catch a trend down. But if the price continues to go up and it doesn't turn into a kiss goodbye, then I'm never in the trade. So we'll talk about contingency orders and stuff like this later. But you know what's cool is if I put an order at this level, say if this stock comes down to here, I want to be in a short position, and we'll talk about short positions. I'm making money. If it continues higher, I don't have to worry about it. So when it does fall down, you make a lot of money right there, right? Make a lot of money. You know, again, it can be very close together. You know, I can draw this in as a double top here. Well, I could also draw this in as a double top here, can't I? And so we have the same level double top. We draw a support line across the bottom. Look at that. There's a kiss goodbye. What do? I put a contingency order to go short. And if it were reversed, I would go long. And I let these things happen. So in the Mentor Club is where you can really learn how this works in real life. And it's just a thing you practice. And get better at. It's not, remember when I set the context, it isn't like one day you didn't know how to do it and then today you do. This takes time to see these support and resistance levels at different time frames. And with practice, they just jump off the page at you. You'll notice how many double tops and kiss goodbyes there are in this right here, and how many levels of support and resistance I just happen to draw in here. So that's possible. That's really cool stuff. So no, there's a lot of possibilities in this. When it gets right here, all three of these charts are the same. Well, we could continue in an uptrend and achieve a new high. That could happen. We could hit a double top and end at the previous high. Or we could even not even get back up there and wind up with the head and shoulders. So these are patterns where, this would be very bullish right here. This would be a little bit of an alert. This would be, almost bearish right here. We don't quite have a new downtrend here. As soon as this breaks, we would, because we then have the 4 points we need of 2 lower highs and 2 lower lows, so it's close. But it's obvious why they would call this a head with 2 shoulders, right? Obvious. Hopefully it's obvious. So there's many possibilities what happens, and part of technical analysis is to study these patterns. And in the previous version of 4 pillars, I only introduced maybe 3 or 4. I've decided to introduce more in this pillar. And here's our uptrend. So we have our uptrend, our downtrend, our sideways trend. We have a double bottom, which means they said yes here and they said yes here, right? We have the inverse head and shoulders. We have the regular head and shoulders. And all of these have an opposite. We have a cup and handle and an inverted cup and handle. We have the kiss goodbye down here. We have the kiss hello up here. We have an ascending triangle and a descending triangle right here. Sideways trends are when we're not achieving higher highs and higher lows. This is called a pennant pattern, just like you used to have on your bike, like a flag. The rising wedge is different, as you can see, than the ascending. An ascending triangle would be coming up to resistance. We have a falling wedge and downtrends of a channel that are more than one higher high and higher low. We've established a channel. So these are the way to study these is not to sit here and memorize them. Okay, it's not going to be healthy. Well, it's not unhealthy, but it's not the best way to do it. The best way to do this is join Mentor Club if you're not in there already. Most people that are in 4 pillars are in Mentor Club, so you've probably been in there for a while, and you've probably heard guys like me and Noah Davidson and Corey Halliday and the guys we have in Mentor Club say, hey, here's a head and shoulders. Oh, look at this double top. Oh, look, here's a kiss goodbye. And we use this language all the time. Now, there are other patterns than this, but what do we have here? Probably, let's see, 6, 18. Is that how many's on here? Probably. 18 is a good number to start with. There's more than 18. But these are the ones that you'll recognize the most. And here's the good news, and I'll say it again. Remember in fundamentals, once again, where in The Intelligent Investor, Benjamin Graham says, hey, we've looked at all this fancy stuff. When it comes right down to it, we like earnings and we like growth, and here's our formula with those 2 things. And it's very much that way with technical analysis, is you can get way wonky. I mean, we are barely scratching the surface of this stuff. And if you want to look at the algorithms of these high frequency trading and algorithmic trading, we barely scratch the surface of what can be programmed. But these are the things that a human being can see pretty easily. And so we can run searches. Let's say the market's turned. Let's say that the GDP numbers have come out terribly. And let's say the fundamentals, sovereign-wise and also market-wise and a few company-wise, aren't real great. And we say, you know what? It probably wouldn't hurt our feelings to put a couple short positions on to take advantage in case this does fall. If it rises, we'll take our hits with exit strategy, but we'd like to at least get some downside exposure. So maybe we find stocks that exhibit patterns like a double top, where they just said no twice. Now this is a program. It's not a program. It's a website called FinViz that I like. But there's a bunch of others. We talked about, I think it's FinBox and some of the others I go to. But right here we can run a technical search, and you'll notice that we can search for data fundamentally and we can search for data technically. or we can combine them all if we want. So right here, it's saying I would like the computer to find patterns, and this is all that the algorithmic trading things do. Is it is not hard for a software program to do facial recognitions. Not hard at all to do facial recognition. Well, it's not hard at all for it to see a pattern in a stock chart either. So as Arthur Levitt said, the ease of today's technology, we should be the most informed generation of investors in history. The ease of today's technology is an opportunity to do more, not an opportunity to do less, but an opportunity, a mandate to do more. And so I can hit this here and say, show me all the double tops, and it will. And then I can mouse over this one. Here's one called Advisor Shares Dorsey Wright. It's an ETF. And I can see that it's had a double top right here. In fact, this one's had a triple top, so it would be included in the double tops. They're really saying no here around $47, aren't they? Really adamant on this. And so we can run searches for these things. And so that's my invitation to you, is to run some searches for, play with a program, this one or one like it, play with it and say, let me see if I can find this pattern in the search. If I see an ascending triangle or a descending triangle or wedge, which is also a pennant, can I see resistance? Can I see a head and shoulders? And start looking at these patterns. Again, there's more than 18. Some searches will have these 18, some won't have as many, some will have more, depending on the sophistication. But you can search for these now, and instead of having to look through all these stock charts, you just run a search. So think about this. I can now begin combining fundamentals and technicals and running searches for both and narrowing down my list of stocks. I think it's a good stopping place. So let's do some homework. If you haven't attended a live coaching group in a while, get one in there and make sure you're staying up with your Cash Flow Academy coaches groups. And identify the trend in the market. That's good homework now, okay, that we've understand what technical analysis is, and we've talked about basic trends. So first, we would hopefully be able to look at the market today and wherever it is and say, here's some trends. Let's find 5 stocks at random. Pick a bunch. Pick some tech stocks. Pick some social media stocks. Maybe some Facebook. Maybe get some pharmaceuticals like a Pfizer. Maybe get a retail product like a Coca-Cola. Get maybe some financial like a Goldman Sachs, and just find different types of stocks and say, I'm going to draw support where I saw them saying yes. I'm going to draw resistance where I saw them saying no. Just begin practicing that skill. And then pick some stocks that are an uptrend and start drawing some trend lines. Start seeing where you can connect bottoms and connect tops of valleys and mountains, and see if you can find some trend lines. And then, start using these searches and get familiar, because now this is how we find stocks. I mentioned this earlier, that every Monday, I have a meeting with some of my partners that have a joint account. And it's my job to come with ideas. So I need to be able to search for stocks using stock patterns and fundamentals to say, here's my ideas of what I like to add, or maybe I say I don't like anything, we're not going to add anything. But if we've sold an option, the option's expired, we've collected our money, we don't want that money stagnant. We might find a new trade, a new place to put it. We might find some that we just stick with for a while. But it's there. When I'm looking for a new idea, I'm going to run a search and see what's out there that fit my fundamental criteria and that fits certain technical criteria. Hopefully you're having appreciation for, a lot of people say, well, can you just give me a step 1, step 2, step 3? Well, the market doesn't always act the same. So you can't use the same cookie recipe on every market, because the oven's temperatures get different, right? Sometimes it's a freezer. So yeah, but what we can do is learn the 4 pillars, because those will never go away. When we come back, we'll start delving into candles. Make sure you do this homework and that your behavior is in line with your education. If you'll do all of those things listed, I know you'll be better and faster and move along the continuum better than if you didn't. And it's fun to run these searches and find these stocks and get used to the technology a little bit. So when we come back, we'll hop into candles.